CNBC's senior analyst, Insana. Ron, it's good to see you. Wish it was under better circumstances.
Yes, the circumstances could be considerably better. And most of this started overnight in Europe, where there were concerns that the debt crisis is not only deepening and spreading, but threatening the solvency of some French banks, most likely, and other European banks as well. These are all unconfirmed rumors, big bouts of speculation, but that led to a sell-off in European shares. And the economic data that you mentioned also contributed to the losses we were seeing so far.
So we've got a bad housing number, and we also have this consumer price index, which shows prices are up. I mean, essentially Americans paying more for things like gas, food, clothing. At the same time, unemployment is high. I mean, dare we say the S word, stagflation?
I think that's a little premature. If you go back to the period in which we really suffered from stagflation, we had interest rates, unemployment, and inflation all in double digits. Right now, we're talking about consumer prices that are still just above 2 or 3%, and it's high relative to what we've become accustomed to. And I think the bigger worry, honestly, Savannah, is deflation and the risk of another recession. That's what has the market so upset. And the fact that, like in Washington to a certain extent, there are no adults in the room in Europe right now. They're letting Rome burn and fiddling quite happily as this bank crisis gets worse and worse, and they have yet to come up with a credible solution.
And Ron, give us the perspective here on the Dow. I mean, one day it's up hundreds, next day it's down hundreds. I mean, overall, what kind of drop are we talking about if you took it from the perspective of a month or two, or even so far this year?
Well, so far this year, the losses are contained to single digits for all the major market averages. We have seen the Dow from its peak at the end of April to the low that we saw recently fall about 20%. Same for the S&P. That is either a correction or on the fringe of a bear market. And people jump to use the word unprecedented when it comes to the type of volatility we've seen. In point terms, that's true. As of last week, that was the first time we ever saw the Dow move 400 points 4 straight days in a row. But in 2008, early 2009, in 1987, in other periods, we've seen even more extreme bouts of volatility. This is not good. And the fact that interest rates, for instance, are plunging, are sending signals about further weakening in the economy. I don't think we're going into another recession, but the risk is there unless policymakers both here and abroad finally take some truly definitive steps to start straightening out the job market and the financial crisis overseas.
Yeah, and unfortunately, no real evidence of that so far. Ron Insana, CNBC's senior analyst, always good to talk to you. Thank you.
You as well, Savannah. Thank you.